Sorry about that. Let's start over. Good morning, everyone, from Chicago. It's 8:03 a.m. Chicago time on Tuesday, the 28th of February, 2017. Thanks for joining me. For some reason, this new fancy headset doesn't quite cooperate as much as the old one did. I apologize on that. Again, you're with me here for another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. As I was saying and speaking to myself, apparently, the overall market position is about the same as yesterday, mostly unchanged, just slightly up. The strong market today is the Japanese yen, followed by the Euro Stocks 50 and DAX in Germany. The laggard today is crude oil. Crude oil is down 62 cents, trading at 53.43, down 1.15% currently. Gold's trading at $1,256.70, down $2 or 16 or 17 basis points. A mixed bag this morning from the pre-open. And it's looking like we're hanging on the S&P 500. We're hanging right in the middle of yesterday's range. It did about 5 minutes ago. It did look like the market was in the same position as yesterday, but more products have turned green since then. But overall, it's non-directional other than crude. Crude's experiencing a gap down. Crude's in the same pattern. I'm going to cover crude a little bit today, just to show where we are. It's basically been balanced for a while. As far as news flow, this morning we got a couple of numbers from the U.S. Q4 preliminary GDP analyzed came in at 1.9, missing the 2.1% expected. Personal consumption 3.0, beating 2.6% expected. We also got January advanced goods trade balance negative 69.2 billion, worse than negative 66 billion expected. And January preliminary wholesale inventories month on month came in worse, much worse, at the negative 0.1% versus 0.4 positive expected. And then Q4 preliminary GDP price index came in at 2 versus 2.1, core PCE at 1.2 versus 1.3. So a lot there. Also overnight, France reported its CPI is much lower than expected, 0.1% for February month on month versus 0.4 expected, missing its annual expected at 1.5%, came in at 1.2. So again, looking a little weaker than expected. The other news is, of course, tonight we're going to get the 9 p.m. Speech by President Trump to Congress. This is his chance to clean up a little bit the rocky start that his administration has gotten. And he's going to be talking about health care, military spending, and so forth. The market's potentially going to react to that as he reveals what he's after. The Dow had its 12th straight close in record territory yesterday, eking out a close that was up 0.08%. The all-time high is 13 days in a row. So today may be the day. 13 days in a row. That was a record that was set in 1987, the Reagan years. And then the Fed rate hike for March is now priced in at 50% chance. At 50% chance currently, as far as what the Fed will do. It'll be interesting on this March Fed release what we're likely to get. Other than that, looking out for the day, preparing ourselves for the day, we have Case-Shiller that's just come out a couple minutes ago. But the big one today is Chicago PMI. Chicago PMI is set for the public at 9:45, to subscribers somewhere between 9:41 or 9:42 a.m. So be careful if you're holding a position and you don't have enough cover into that release by about 9:40. I would look to hedge or flatten. That's at least what I do. If I don't have enough space or a good theoretical average on a trade, I don't go into that number with a position on. The expectation for Chicago PMI is 53.3. I'll probably have the rumor and I'll tweet it out at about 9:42. The market reacts to the preliminary move. It generally does not respond to the public release at 9:45. So just be careful there. At 10 o'clock Eastern, we get Richmond Fed, U.S. Richmond Fed, which is a low tier number, expecting 10 for February, and then at the same time, consumer confidence, an important number. It's a 2 out of 3 star number. Consumer confidence index for February is expected at 111.0. The previous is 111.8. And then as far as speakers today, we're looking for Fed Speaker Williams at 2:30 p.m. Eastern. Speaks on the economy. At 3 p.m. we get Fed Speaker Harker. At 3:30 we get Fed Speaker Williams again. And then at 6:45 p.m. this evening, that's New York time, at 6:45 p.m. we get Fed's Bullard, and then at 9 p.m. we get the Trump speech to a joint session of Congress. A lot on deck. This whole week has a lot going on. Remember, Tuesday is statistically the highest volatility or highest range day of the week. So expecting some action today. Let's quickly review what we talked about yesterday, what we expected versus what we got. Here's Hypo 1 yesterday. The expectation, the market was likely to open around the 23.64-65 area. The expectation is for the market to push higher, get into new high territory, and then fall back in. We're looking for a high of about 60, 68.50, 69, and then for it to fall back into range and close somewhere around 23.65. That's the primary idea behind yesterday. So, what does that mean to you? How do you trade that? The goal yesterday was to look for the market to base lower and look for a push higher first. And then once it pushes higher, we want to keep an eye on how it responds above the prior day's range. Does it run into a lot of offers? Does it have a harder time pushing up than lower, and so forth? And that's what we base our trades on. And then you use the intraday market generated information to assess the probabilities. But that did not quite work out. What did work out was Hypo 2. Remember, this chart is very much stretched. The range on this chart's from about 46 to about 69. But overall, this is essentially what happened yesterday. We were looking for to start moving lower, an open auction on the open. The market starts to move lower. Looking for it to test down into the 60-50, 23-60-50, put a base in here with a higher low, and then start to move out of the range and head towards 68, 69 on the close. Here's what actually happened. So remember, this is the pattern is open auction, drop into the 60-50, put a higher low in, start to move out of the range. That's the pattern we're looking for. Let's look at what actually happened. Here's the drop. Again, I stretched this chart yesterday because it was so tight, but here's what it would have looked like yesterday. We open around in this 23.64 area, open auction, stretched down. The catch yesterday, the difficulty yesterday was the opening swing was so slow. It took 54 up till 9:54 Eastern to actually put a low swing in. That is incredibly slow. We generally put our swing high and swing low in within the first 8 minutes or so, 8 to 12 minutes, 12 being on the high side. Waited essentially 24 minutes to be able to complete the opening swing right here. So we moved down. Where did we go? We went to 61. Remember, we were expecting 60.50 on hypo 2, right? 60.50, then look for a push up, a pullback to a higher low right here, right? Right there, higher low. And then the main move of the day would happen after that. And the main move occurred right here, pushing 5.75 points, which seems like a big move here on this scale, but it's actually not a very big move. That's just outside of what we would consider to be normal. It's just inside of a second standard deviation rotation. And then the market continued to move higher, just as expected. It just isn't a clean trade, folks. It's just the market, this is the nature of the market right now. This is the cycle that we're in. We spent an awful lot of time doing a whole lot of nothing right in here. So we moved out of the prior day's range, which is delineated by this green line here. You can see we moved out of the prior day's range. We broke the IB high here, and we just sat right at the prior day's high before pushing out, and then we ended up pushing to 70.75. Remember, we were expecting 68, 69, and then we expected the low to be 60.50. Again, here's the plan. There's the plan, and there's what actually happened. We closed around the 68 area, and we held what looks like a profile that is balanced but skewed to the high side. It doesn't matter though. This market, this profile does show consensus. It shows consensus to the upper side, and the value area is valid for this profile. Okay, it's not a jittery or jagged profile. It is a pretty there's a clear taper at the top, at the bottom, and a lot of convexity here in the middle. So the value area is valid. Following that, so hypo 2 was in play yesterday, and it was super slow motion. You have to be really patient. You have to be almost a computer. And then what we carried forward into the session here is we opened, we dropped right away, and then we just sat sideways. Look at this terrible overnight profile. I mean, holy cow, it's got this, the range is pretty tight on the overnight. We have 4 points on the overnight session, which is on the low end of normal. But we have very good volume. So we have 155,000 contracts trading from 3:30 Central or 4:30 Eastern when the market reopens after the pit session closes. That's when my session starts. And then I carry that forward all the way to the 9:30 Eastern open this morning. And that volume there has been about 140 or so thousand. And generally, we've had some pretty good range here. Yesterday, we had good volume, 215,000 on pretty decent range. Today, we have 155, which is lower, but the range is completely compressed, and the market has attempted to push this high multiple times. We have a small double top here, but the prior high is just a tick below, and it has traversed across the mid and is holding near lows. This is kind of more of the same. We have not had a neutral day here, a decent neutral day closing to the downside. So overall, a very strong market continuing, but it is showing signs that it's not able to hold on. It's not able to hold on to these higher prices, right? It's not able to move away from these 60s and stay up there. So this morning, this looks like it might start out lower, but again, it's the same broken record every day. It's likely to start out lower, find a base, then continue higher, push highs by a little bit. Yesterday's range is nothing special, so it could be breached. Again, today is expected to be a higher volatility day than yesterday. So with that being said, and my time being up, let's get to the hypos. This morning, the primary hypo is for it to open out of in range, in value, push the overnight low, breach it, and then stabilize, and then look for a higher low. Look for the market to then test 68.75, pull back, and then push towards the high potentially breach the high, and then look for it to close near the high of yesterday. That's the primary hypo here today. That gives us a range of about 60, from about 64, 63 half to about 72, 73. And so that's so this is, that's pretty normal range there, 9, 10 points. That's the primary hypothesis, the most likely plan for the day. So I'm looking for a base. Support is still down here at 60. Preliminary support is 60.50 on any push down. So I know that that's the area that I can still continue to campaign around or add into. Beyond there, I'm going to let this go. It's likely to push down to 57.75 and potentially continue lower. Love to see a neutral day closing down so we can reverse some of this move. Not that I want to be a bear. It's just that's where the opportunity lies, and that's what's likely to cause people to have to get pushed out of positions. And that creates opportunities for us. The alternative, of course, open auction, start to walk up to 68.75, push through, pull back to the opening swing, and then again base, and then continue higher. That's hypo 2. Hypo 3 is the opposite. Hypo 3 is likely to give us a small push up early, and then the market starts to fail lower and then starts to move towards 61, 60, 50. That would be hypo 3. We'll see. Essentially, to trade hypo 3, we need to see the market to push higher with the order book getting heavy on the offer side. So we would want to see a lot of white above us as the market pushes into that higher price. We want to see a lot of offers above us. We want to see collisions on those offers, but failure of the buyers to push through those offers. And then what that does is it eventually leaves us with just sellers. As buyers pound on offers and the offers absorb it, eventually the weaker hand starts selling, and as that starts, a cascade occurs that gives us an opportunity to get short into hypo 3. And that's just hypo 3. I'm not saying that's what will happen. Real quick, you've got your 3 hypos. Real quick, here's a look at crude. I'm charting pit session only. When I go back to crude and I plot everything back, I'm going to switch to a 60-minute chart here. When I plot everything back to where we have been in balance, which was way back in September, you'll see that the most important price here is 53.23 being the balance zone, and that's basically where we're headed to. So as I zoom in here, you'll see that the market has keeps moving away and just coming back. So here's what we have. We have a push up, down, consolidate, right up, bouncing. Look at these bounces right up against the point of control, the MC point of control. And then it pushes away again and comes right back and bounces right off the point of control, pushes away. This last push, by the way, is a lower high and an exceedingly weak attempt. Every time it's pushed higher, it has fallen through. Here's the push down, lower high again, and now we're trading down here. That's what we're trading right now. Look at what it does when it gaps up. It immediately finds its sellers, and it finishes near the low. Gaps up, immediately finds its sellers, and finishes near the low. Gaps up, here's the next day. Gaps up, finds its sellers, and immediately pushes into the low. I don't know how long that plan will hold on for, but that's basically what I've been looking for. I'm looking for crude oil to push up, looking for offers to step in. I'm looking for the market to fail to push higher, hold on to the short, and let it finish near the lows. And of course, that'll continue until it does not. But crude is completely imbalanced in a wide range. There was news today from Saudi Arabia saying that they want prices around $60, and that hasn't done anything to budge crude oil up. So anyway, I'm way over my time. These trader bites have been long. I apologize for that. But hopefully you're carrying some of this forward into your plans, into your own individual plans, and picking up ideas here and there. Don't try to duplicate anyone's trades. Just pick people's minds and try to incorporate what makes sense to you. In the end, your trading plan has to be your own. Good luck today, and I'll catch you later. Take care.